Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining me. My guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming back.
Always great to be with you, Michael. Thank you for having me.
My pleasure. You've got a whole bunch of stuff stacked up in the shout box. So if it's all right with you, I'd like to read a couple of these guest questions off to you.
Sure.
Okay. First one is, does Nick think the QQQ is continuing higher now that it has blown through the key level of 66 he gave us last week?
Well, when I gave you that level, it does, I took a QID trade yesterday afternoon before the close, so I'm in that trade now. A little overshoot of 66. I'm not going to make that big a deal of it, but I think that the market's very vulnerable right now. We're also, this is an options expiration week, so I don't want to make too much out of the price action that we're seeing to get a lot of institutional game playing, but I still think that 66 area is a pivotal level.
Okay. Well, from one trader to another, what would tell you that it's going to continue to go higher and it's not going to pull back? Because we had a lot of guys saying this is a top here that are great traders, and then a couple of them saying it could. This could be actually an acceleration point, and we've all got to be making a decision. Is it an acceleration or is it really a top?
Well, to be honest, that's why we have to use stops.
Okay.
I'm in the camp that the market right now is vulnerable to at least some kind of correction, probably most likely after this options expiration. I've been very patient on inching into shorts, and I just started to do so yesterday. Again, I'm probing it. I don't want to, go all in on the short side here, but right now the Qs are Apple. That's really the gist of it. As long as Apple holds up, the Qs will probably hold up. Once Apple corrects and comes back in, you'll see the Qs come back in. If you take a look at the semiconductor index, traders can look at the SMH, or they can look at the Philadelphia Semiconductor Index. They've having a pretty good day today. But if you look at the SOX, which has not taken out the high from February, it's actually lagging the triple Qs and it's lagging the composite. That ultimately, to me, is somewhat of a negative divergence, as the semiconductors should really be leading the technology indexes higher, not lagging them.
Okay. All right. Let's move on to the next question because, this is not the easy part of the job, but it is what we do.
That's right.
And the next question is, let's see here, Nevada wants to know your assessment of the VIX.
Okay, I think the VIX now is setting up to go long. I have not purchased the VIX yet. I think we could still see one more move down in the VIX. I would not rule out $13, around $12.95, $13 on the VIX. I think that's going to be a pretty important level. If it gets down there, I think everybody should jump on board.
Okay. All right. Guest Karen Lee, Nevada, thank you for the questions. Let's move forward because I think you wanted to start off talking about gold today, right?
Yeah. Gold has had a pretty good, we'll talk about the GLD since everybody has that. It's had a pretty good decline and now, making a little bit of a bounce. But overall, I do think that, gold is susceptible to further declines. The one thing I want to say about the GLD is that when you have that big acceleration bar, we talked about gold going lower. Right now, I'd watch for some kind of a bounce, not only in gold, but even in a lot of these base metal stocks as well. Anything with metal in there, you can see they're all getting a little bit of a bid. But I ultimately think that these things are setting up to go back down again.
Are we at levels now based on the rally we're experiencing today where you would consider shorting it, or do you think there's a little bit more upside in this?
No, I would not short gold right now. I would wait and look for the pattern on the chart to form over the next week. Then I think you could probably, depending on the pattern, obviously, take another position on the short side. And the same would go for a lot of the base metal stocks like Freeport-McMoRan and BHP and things of that nature.
Okay. All right. Well said. Let's move forward to TLT.
Okay. TLT, I think we had a question in the shout box last week about that, and I said to avoid it as we were coming down to the 116 level. We tapped that level too many times, and it looked like it was getting vulnerable for a break. You came down yesterday with pretty large volume that usually signals that we may even go a little bit lower, but there is very good support at 110. Should we take out that 110 level, then I do believe that the TLT could make its way a little bit lower. And let me just give you the spot that I'm looking at.
Okay.
Okay, 106 and then 102. But 102, if it could get down there, looks really, really good for a significant bounce.
Okay, so all right, are you are you shorting the bond market now through what ETFs, or you waiting to buy it?
I haven't done anything in the bond market, Michael, because we have the Operation Twist going on. I am a little bit concerned, though, that the bond yields are spiking the way they are, even with this Operation Twist. I think that some people are looking at it as a sign of strength. I'm looking at it as foreign countries leaving the U.S. Treasury market. So I think it could be somewhat problematic going forward.
Well, that's a good point that you bring up. Foreign currencies or foreign investment funds that have been hiding in the bond market now pulling out and getting out of it. Well, they generally don't pull out. It's not Christmas. They're trying to go someplace. If you have any idea where the money flow is heading?
Well, right now, what I'm thinking is that if you look at the Shanghai market over the last couple of nights, you're going to see that Shanghai is beginning to tank again. The president has had a lot of words over the last few days regarding trade with China. I think that you got to be careful here. The Chinese could be starting a trade war.
Okay, there's something that hasn't really come across the bow recently.
Mm-hmm.
You think
that would be one of the catalysts going forward for a correction in the S&P 500 and NASDAQ and everything across the board.
Okay, all right. We're going to get to the S&P again before we get out of the segment, but let's cover some more ground here. This transportation average, the IYT.
Yeah, well, traders can look at the Dow Jones Transportation Average or the IYT, which is the ETF, and I always like to give the ETF since everybody can easily see that. This thing has had a huge move today, just a rocket ship of a move today. I believe the transports are up, the Dow Jones transports are up over 3%, which is just a monster move. Traders should watch that $97.50 level, maybe $97.75 as ultimate target upside. And then that move should be completed.
Okay. All right. Apple. Now, you brought it up earlier today. Let's talk about this thing.
Yeah, let's talk about it. Apple right now is just getting whipped around because of options expiration. Today, you're a perfect example of how this thing is getting tossed around like a cheap suit. Opened up at $600 today, sold off, went down to $578. Now it's chopping around $586. But Apple is so overdone; it's become a mania. It reminds me of the tulip bulbs right now. Now, I don't deny that the stock can't go higher in the future, but if there's any kind of Chinese slowdown, which it apparently appears to me that there is going to be, and the Chinese market real estate bubble is bursting over there, who is going to support these Apple prices? That's where everybody's looking for the Apple growth to come from, right out of China. So I think people whoever owns Apple right now would run for the hills.
Okay, got it. J.P. Morgan.
J.P. Morgan, as you know, I've said until this stock will lead the market one way or the other, and it has surged. I mean, I've actually been surprised by the action in JPM has been so robust. Just even on that news the other day where they get to increase their dividend by a nickel, the stock really took off to the upside. But this stock is another one that is overbought, overextended. Maybe it has a little bit more upside. I would think by the middle of next week, JPM needs to come back to earth.
Okay. Now, you've heard of the Bradley model, right?
I have heard of the Bradley model. I haven't looked at it probably in about 5 years, so I'm not sure where we stand with the Bradley model to this day, but I do know of it.
Okay. Well, I'm going to email you. A guy that's on the show named Ed Carlson sent me a picture of it. It has the high for the year on the S&P, or actually the stock market, for tomorrow.
Okay. All right.
The 16th.
I got to be honest. I don't know if it's going to be the high for the year, but it would not shock me at all cyclically if we top out this week.
Okay. Now and we've got a lot of other guys who've got 30, 40, some of them more than that years experience trading, looking for, and we've been talking about this for a long time, right now to be a top in the market. I got one lone wolf out there that is saying, be careful because it could be an acceleration point. Our next cycle date is somewhere in July 17th. here's the $10,000 question that I'm asking you. What would tell you that we're not topping out in regards to technical analysis, price action? What would tell you that we're not topping out and that this is actually a launching pad for something that could get really out of hand to the upside with the stock market?
Well, you still have a lot of good charts out there. You have a lot of stocks still trading above their 50 and 200-day moving averages, and that's the bullish case. If I could make one right now, there are many, many stocks out there that are holding up very, very well, including the financials, most notably. On the flip side, though, you have most of these base metal stocks in the toilet bowl. They're absolutely, still look horrible. And that is a major component of the market. If there's no building or construction going on, then who's using all this copper and things like that? Then there's a problem. So it's really it can go either way. But I'm in the camp that the market is topping because we're up so much from October. We're due for some kind of pullback, some kind of correction. Hey, Michael, you know as well as I do, we could all be wrong. I've been wrong before in my life.
Ditto.
I've seen, markets get euphoric like this, but it's everybody right now is just so complacent. Everybody's in love with, everything Ben Bernanke's done. There's just so much easy credit out there. The U.S. debt is at, nearing 16 trillion. I mean, everybody's forgot all the problems. It's like they're living in, fantasy land again. But hey, that's what makes a market, and we'll see where this heads. Like I tell everybody, if you're going to start to nibble in on the short side here, and this, I have begun to do so. You just need to use stop loss orders, because if I'm wrong, Michael, I'll be wrong for a week, and it's not going to affect me. I'll change my position tomorrow if I have to. I mean, that's what a trader has to do.
All right. No, this is the critical part where we got to make our decisions, and I'm glad you came on the show and told us about it. Nick, thanks for coming on.
Thank you for having me, Michael. Have a great day.
You too. My pleasure. Nick Santiago, President and CEO at InTheMoneyStocks.com.